and News Talk 94.5, WPTI, 96.7 FM, WTOB. You're listening to the Wealth Guardian Show with Doug, Brice, and Garrett, helping you retire that job, keeping the paycheck. And this morning in the studio, you have Mr. Brice Payne. I'm Garrett Ray. And this morning, we're doing a two-part episode. First segment, we're going to get into some more Social Security information you got to know. And the other thing that we're going to talk about in the second segment is 5 things you need to do before retirement. Good morning, Brice.
Good morning, Garrett. Happy weekend to you. How you doing?
Happy weekend to you too, sir. I'm doing well.
Good. Glad to hear that. I am as well. Ever getting into those warmer temperatures here? I think I can take the hood off the top off the Jeep here any day now and start enjoying a nice wind-capped ride into work.
Yep. We just need the rain to hold off.
A little bit. That's right. That's what you got to park it underneath the covered space right now.
April showers, May flowers.
All of that. Well, hey, before we get into this Social Security discussion in the first segment and 5 things you need to do before retiring in the second segment, what we always do here to start off the show is we take a minute and just give a Wealth Guardian service salute to all the people out there who put on the uniform, whether they're first responders or they're active military or even retired military. Thank you for your time and your service and the sacrifices that you've made. And additionally, the sacrifices that your family has made, because you all put in a little bit to that just to keep the stars and stripes actively going, as it were. So thank you for that. And there is your salute for the week. Garrett, we always ask ourselves a question in order so that everybody out there listening can understand that you, me, and Doug are real people here at the Wealth Guardians. We're not just some voice on the radio. Mm-hmm. We're real people. We want people to be able to relate to us and not be afraid to come in and sit down with us if they're preparing for retirement. And then one of the things that we do to help have us be a little bit more relatable, if you will, is we ask ourselves a question: better get to know your Wealth Guardian's financial planner. And you came up with the question for this week. So what is that question that we want to answer out there for the masses?
Yeah, so little known fact. So when it comes to the home front, Brice and I are both the primary cooks of the household. And so the question I wanted to ask you, Brice, is what is your favorite meal to cook for your wife and your mom? And I'll let the listeners know what my favorite meal to cook for me and my wife is. Yeah,
so Garrett and I both are a little prone to being more active in the kitchen than our spouses, I think. And I upgraded the entire kitchen last year and had better appliances and better tools and all of that, and just kind of made it a little bit more of my hobby is cooking. And I think I have finally gotten to a point where I can make a pretty good chicken breast, not on the grill, but on the fryer. And or on the stovetop, mm-hmm. And I've gotten to where it's really good tender. Whether I can add a difference, it all comes down to the sauce.
Okay.
Comes down to what the condiment is, and so I think I do that pretty well.
There you go. Yeah, chicken breast can be tough to get just right.
Yes.
It can get dry.
Yes.
So I'd say my dish is also chicken related. I do pretty good smoked chicken thighs.
Ooh, okay. I haven't gotten into the smoker yet.
Yeah, well, I just do it like on a normal Weber.
Okay.
Just like the typical grill you grew up with.
Okay.
Just kind of put the fire off to one side, the chicken thighs on the other, do it nice low and slow for about 220, 225 for about 3 hours.
Really? Okay.
Then for the final 45 minutes, I'll move them skin side down, closer to the fire for more direct heat, kind of crisp up the skin, smoke it with a little bit of apple wood. Good stuff.
Nice. Yes. I'm already, my mouth is watering. We'll have to try each other's out sometime.
There we go.
All right, very good. All right. So what we're going to cover here in our first segment is Social Security. And I know that if you've listened to the show in the past, you're probably about at this point saying, why are these guys always talking about Social Security ad nauseum? Well, there's a reason that we always talk about Social Security. Social Security, for most of us out there listening, is going to be, if not it is going to be our main source of income in retirement. Now, some people have different sources of income that we'll talk about, but for all of us out there, Social Security is going to be probably our main form of income. And there's different ways to file for Social Security.
At the least, Brice, you could say it's a very important source of income.
At the very least, right. It's not something that you want to get wrong. And when I say get it right or get it wrong, if you're asking yourself, well, what does he mean by getting it right, getting it wrong? When I'm ready to file for Social Security, I just turn it on. That's not exactly true. There are different ways to qualify for your Social Security benefit, and filing in one way versus filing in another way could mean literally, I'm not exaggerating here, could mean the difference between tens and tens of thousands of dollars between when you turn it on and for as long as you're getting it. We have seen couples in here who've lost out on $100,000 by the time they were 70 years old.
Yep.
So it is very important that you understand how to file for Social Security, what your options are, what the nuances of it are, how it's taxed, all of that. So the reason we're bringing this up yet again is because as holistic financial planners, we want to make sure not just that your portfolio is allocated the right way. Sure, every advisor or planner is going to help you do that. But we take it a step beyond that, and we make sure that all of your income and your assets and your expenses before retirement and in retirement are all synced up and working cohesively together so that you're not taking excessive risk, that you're not paying Uncle Sam more than you have to, that you're getting the most out of your Social Security dollars that you can. And it's not just one little, I'm going to press this button as opposed to that button and be done with it. It's actually, dare I say, complicated.
Yeah.
And you probably want to have a professional on your side who is certified and licensed in these kind of things, as we are. We're certified with the National Social Security Association here at the Wealth Guardians. And you just want to make sure you're doing this right. Well, because we want to help make people understand how important this is and what kind of things they can do right, what kind of things they could do wrong, we do a seminar a couple times a year.
You do?
And so the reason we're talking about this now is, you can guess it, the seminar is coming up. And it's actually this upcoming Thursday and then the following Tuesday. So Thursday, April 24th, 6:30 p.m. in Clemens. And then again, Tuesday, April 29th, 6:30 p.m. in Clemens is when we're doing. This is the first time we're doing it this year. We will do it again later in the year as well. But let's go ahead and we want to just kind of imprint on everybody out there why this is so important. So I just explained why we talk about Social Security to the degree that we do. Let's take a moment and talk about, Garrett, how Social Security is taxed. This is not an easy answer. It's not like, oh, it's taxed like this. Not so. Now, if you're listening to us in North Carolina, Social Security is not taxed on the state level, but it is taxed on the federal level. And all states it's taxed on the federal level. So when we say, how is Social Security taxed? Well, either 0% of your Social Security is taxed, 50% of it is taxed, or 85% of it is taxed. And there's a little calculation that you can do to figure out where you might fall in that. And then obviously the question becomes, well, how can I arrange my income or whatever it is that needs to be arranged so that maybe less of my Social Security is being taxed? So here's how it is. We want to talk about provisional income. What is provisional income? If you've never filed for Social Security, you've probably never heard of provisional income, right? You take your adjusted gross income. You don't include Social Security as part of that adjusted gross income. Then you add 50% of your Social Security, and then you add whatever tax-exempt interest you have. I know it sounds like an oxymoron. Well, why am I adding that if it's tax-exempt? Well, it's not taxed as far as your regular tax bracket, but it is calculated when we're figuring out how much of your Social Security is going to be taxed. So you take your adjusted gross income, you add 50% of your Social Security income, and then you add any tax-exempt interest that you might have. That equals your provisional income. That's a magic term right there.
Yep, and the tax-exempt interest Brice is talking about is this little thing called municipal bonds. You've probably heard about them before. Oh,
munis.
Those are tax-free at the federal level. Well, yes and no.
Yes and no, right?
Yes and no.
Yeah. So that's what I meant by tax-exempt interest. So now that we've got our provisional income, now that we know what that is, the first $32,000 of your provisional income, none of that is going to be taxed on none of that's going to be added toward your Social Security tax. Then $32,000 to $44,000, that is going to make 50% of your Social Security taxed at whatever tax bracket you fall into.
Yeah, it's taxable. 50% of it is
taxable, right?
Yep.
Right. It's not. It doesn't mean that you're hitting a 50% tax rate.
Right.
Then anything above $44,000, so $44,001, That now makes that part of your Social Security, that is 85% of that is taxable.
It's taxable.
So let's say it's a tiered system. So let's say that your total provisional income was $44,001. That means only $1 was taxed at 85%, or 85% of that $1 was taxed.
Correct.
So 85% of $1 is 85 cents, and you'll see you fall into the 22% tax bracket. That 85 cents is taxed at 22%. That's how that falls. It's still a tiered system, but it is complicated. So that's
not complicated at all, right?
Yeah, it is. It took me a while to understand that and to really be able to. It always helps to have the calculation they're looking at you. So, all right. So then the next thing we want to talk about real quickly is what is the earnings test? This trips up a lot of people.
Yeah.
And Garrett, you know what the earnings test is. I've been talking too much here.
Yeah, so earnings test, it applies for folks who, let's say you want to file for Social Security early. What do we mean by early? Well, depending on what year you were born, you have what's called a full retirement age as far as the Social Security Administration is concerned. So for those of us who were born in 1960 or later, your full retirement age is 67. But let's say that you decided to file for Social Security and you were 65. Technically, you are filing early as far as Social Security is concerned. Right. But you also have the aspiration of continuing to work. Now, maybe that's a part-time job. Maybe you're not working full-time, but you are still subject to the earnings test. What does the earnings test mean? It means that if you earn above a certain amount of money, and we'll disclose that here in a moment, then for every $2 you earn above this limit, then the Social Security Administration is going to withhold $1 of your Social Security benefit per month. Okay. Now, the money doesn't go away per se. Mm-hmm. They keep it in a separate bucket. When you reach your full retirement age, in this example, I'm using 67, then they will redisperse the monies using an actuarial table. They're going to say, okay, this person just turned 67. We believe she is going to live another 20 years. So they'll take the amount of money that's accrued in this bucket, and they will take those 20 years, multiply it by 12, and then they will divide that number by the amount that's in that bucket and pay you out, essentially, that money over the remainder of your life, according to the actuarial tables.
And that's the earnings test.
So what is the actual cutoff?
Yeah, what's the cutoff?
So if you earn above $23,400 per year, you have now hit that threshold. So you have a part-time job, let's say, and you have filed early, meaning before your full retirement age of Social Security, and you make $25,000. Okay, that's above the earnings test. So that means that they're basically going to withhold $1 of your benefit per month for every $2 over that earnings test.
There you go. But it doesn't apply after you've turned full retirement age.
Correct.
A little known fact, the amount during your full retirement age that you can earn is actually $62,160. That's a little known number there. But anyway, we're going to have to go to a break here. So that's, again, we've got our Social Security workshop coming up Thursday, April 24th and Tuesday, April 29th at 6:30 p.m. in Clemens. If you want to attend, there's no cost or obligation to attend, but you do have to call and register. So go to our website and go to thewealthguardians.com and click on the events tab, or give us a call, 336-391-3409. All right, it's time for the trivia question before we go to break here. Garrett, are you ready?
I believe so.
The first tariff leveled by the United States was the Hamilton Tariff.
Okay.
Was it by George Washington against England in 1789, Thomas Jefferson against France in 1801, James Madison against Mexico in 1810, or John Quincy Adams against China in 1827? All right, stick around for the answer to that question on the other side of this short break. This is Brice Payne. With me is Garrett Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. This is News Talk 94.5 WPTI. This is 96.7 FM WTOB. News Talk 94.5 WPTI. 96.7 FM WTOB. Welcome back to the Wealth Guardian Show, where we help you retire the job and keep the paycheck. I'm Brice Payne in the Wealth Guardian studio this weekend morning, along with Garrett Ray. And in this second segment, we're going to discuss 5 things that you need to do before retiring. After all, we are retirement specialists, so we're going to help you figure out the things you need to do before turning in that retirement slip. Now, before we answer this trivia question that I left you hanging with at the end of the first segment, I want to ask you this. Are you planning to retire? Probably, right? Have you met with a retirement income certified professional who's also a fiduciary? Well, if you haven't, I'm right now here officially inviting you to take us up on a complimentary review of your current situation. So as certified retirement planning specialists, we're going to put together a customized written plan with strategies for portfolio allocation, income distribution, Social Security filing, tax efficiency, perhaps adding the additional benefit of often reducing both the risk and the fees of your current plan. It's a lot. And if you've put aside at least $400,000 and you want to take us up on this no cost, no obligation review, just give us a call, 336-391-3409. That's 336-391-3409, or you can go to thewealthguardians.com. That's thewealthguardians.com to learn more. Let us show you in black and white, with no cost and no obligation, how to retire the job and keep the paycheck. All right, let's get to this trivia question before we start our second segment here. Garrett, a lot of tariff talk in the news lately, and the first tariff leveled by the United States was the Hamilton tariff. Was it by George Washington against England in 1789? Was it Thomas Jefferson against France in 1801? Was it James Madison against Mexico in 1810? Or John Quincy Adams against China in 1827? When did we level the first tariff?
I'm normally a pretty good U.S. history buff, and this one has me definitely stumped. I'm going to say it was Thomas Jefferson.
No, you got to go back earlier than that. Tariffs have been a part of American diplomatic and foreign policy since the very beginning.
George Washington, huh?
The Hamilton tariff was in 1789, leveraged by George Washington against England because England was where we were getting most of our things at that time. Yeah. So it was almost the anti-tea act right there.
There you go.
So it's gone back ever since then, and we have been implementing tariffs to some degree or another on many, many countries ever since then.
All right.
Very good.
Fair enough.
Well, let's now dip into the second subject here. We don't have a lot of time because we went long on the first one, but this is 5 things you need to do before retiring. This segment here is for anybody who is a couple of years away from retiring. They're not sure if they're ready for it. They don't know what they're supposed to do. They don't know how to figure out if they are able to retire or whatnot. What are those big things that they should have done that they never thought of? Well, here we go. Here's just a short, quick list of it. The first thing you want to do, Garrett, is what?
It's probably the most painful one, but let's go ahead and rip that Band-Aid off, folks. It is calculate a budget.
There you go.
Now, does it have to be down to the shiny nickel? We're counting every cent? No, I mean, that might be preferred. But we certainly want to understand what our major obligations are, ones we're having to pay off now, things that we know are coming down the pike. Let's say we know we have to replace our roof in 2 years because it's getting 25 years old and it's been neglected a little bit. We got to plan for that. If we have fund money, discretionary spending, if we're going to travel, take that trip to Italy we've always dreamed of, okay, let's get it in the budget. Let's make sure that that's a reasonable goal. And of course, Brice, as we enter retirement age, what is another thing we need to be considering that for whatever reason, some people don't? Healthcare costs.
How about that?
As we age, our bodies tend to not function as well as they did when they were in our 20s, 30s, 40s, and even 50s.
We're not fine wine.
No, we are not fine wine. We don't age as gracefully as we like to think. Let's go ahead and have some sort of budget discretionary for increased or anticipated increased healthcare costs for sure.
That's right. That's one of the first things that we have to do is we have to understand what are we going to be spending in retirement.
Yep.
That way we can start getting to the answer of, are you able to retire now or do you need to wait 5 more years or somewhere in between there? That's the first thing we got to do. And that's, again, like Garrett said, that's the most painful thing because we all like to know what kind of income we have, what we're making. We all like to know what kind of assets we've collected up to this point.
Yep.
None of us like to open our eyes and realize how much we're actually spending. So that's the first thing we got to do. Garrett, what's the second one?
Do an inventory of our assets. So this one people tend to find to be a little bit more fun. What type of stocks do we have? Bonds, mutual funds, any real estate properties we have outside of our primary home. Now
precious metals.
Yeah, precious metals. Some of us out there may have valuable collections of art, maybe hot rods, gun collections. We've seen it all here. But if it's something that you collected and tend to sell, make a little tidy profit on, okay, let's go ahead and add that up as well. And then we're going to do a quick analysis. Are these assets positioned for growth or are they income producing assets? Those are two different things.
Hopefully one or the other.
Yeah. Otherwise, I would argue it's not an asset. But most of the time we find that they fall into two buckets, either a growth asset or an income producing asset. So let's do that work and bucket everything.
Okay, so there we go. So the first one was calculate a budget. The second one is do an inventory of your assets. Kind of the same thing. One's around your expenses. The other's around what you already have collected. Now, the third one, Garrett, make a list of to-dos. This one is not so much maybe money oriented, but there's a reason that you want to do it. And so what does this make a list of to-dos?
Well, for a lot of folks, we find that more and more folks are charitably minded as they enter retirement. Maybe they want to give back to their church or their favorite charity, or maybe they are really passionate about, the animal society. If there's some major to-dos we want to do once we have left our professional career or volunteer work, all that, let's fit that in to the planning process. Let's understand what wiggle room we have to do those passion projects and make sure that's part of the plan as well.
Let's take it. Let's imagine for just a moment, retirement is a vacation. If you were going on vacation somewhere, maybe, let's call it Spain, wherever, you're going to look up the things to do in Spain.
Sure.
It's like, we definitely want to do this one. Oh, this one's not bad. Maybe we want to do that. You'd make a list, maybe mentally, or maybe you write it down, of all the things that you would like to do, and you kind of prioritize that list.
Sure.
And say, this one we're absolutely doing first.
Yep.
That's one that's got to be done. And then maybe you make it out on a time like wherever you're traveling. Maybe you're going to France or whatnot as well. And so you got to kind of create the list of, this is what we're tackling first, then we'll tackle this, then we'll tackle this. Think of retirement in that same way.
Yep.
You don't want to figure out too late, oh, you know what? I wish I had gone to Spain.
Yes.
You want, okay, so if traveling is going to be your thing for a couple of years, would you want to do that when you're 90? Or would you want to do that when you're 75?
Right.
And maybe some other things before that. So just prioritize your list there. Figure out what it is you want to do. Spend some time thinking about it, because you only get one retirement. And you don't want to be there toward the end of it and think, oh man, there were all these things I wanted to do that I didn't get a chance to do. This is going to tie in nicely with your cost, your expenses. Maybe some of those things like gardening isn't going to be too expensive.
Right.
Joining a garden club or taking up singing lessons, whatever it may be. Maybe those aren't going to be too expensive. But you want to make sure that you've got the expensive ones covered. Right?
That's a great point, Brice. Maybe it's best for a lot of folks to start off prioritizing that to-do list. Then you circle back to the budget and say, okay, this is what I really want to do. How are we going to pay for it? How are we going to allocate?
That's right. That's exactly right. And I can't do all 5 of these things in retirement because they're all fairly expensive.
Yep.
Which ones do I really want to do? Okay, so that was number 3. Make a list of to-dos. I'm going to tell you one thing that you want to add to your list of to-dos is attending our Social Security workshop that we've got this Thursday, April 24th and Tuesday, April 29th. If you're planning on retiring or you haven't yet filed for Social Security and you want to make sure you're doing all that the right way, boy, this is a seminar you really want to attend. There's no cost or obligation to it, but you do have to pick up the phone and give us a call or go to our website, thewealthguardians.com, click on the events tab, or our phone number is 336-391-3409. There's a lot of nuances to Social Security. It's about a 1-hour workshop, and we're going to just enlighten you with a bunch of information that you're going to be happy that you now know before you file for Social Security. 336-391-3409 is our phone number. And it is, again, Thursday, April 24th, and again, Tuesday, April 29th at 6:30 at our office in Clemens. This is the first time we're doing it this year. We will do it again later on in the year, but suggest you don't wait. All right, getting back to our 5 things you need to do before retiring. We got to jump on these quick. Garrett, number 4 is understand all the sources of income in retirement.
Yeah, we touched on this a little bit in the first segment, but understanding how much you are going to be receiving by way of Social Security through that benefit. If we have any rental properties that produce income, some of us out there may be entitled to certain VA benefits or other government pensions. If you have a private pension, that too. Any part-time work that may be going on, consulting, we're seeing that more and more in retirement. So all the sources of income we certainly want to understand when we enter retirement.
Exactly. It goes in there just like calculating a budget, your expenses, and your assets. Let's make an inventory of all that. And the last one, make a list of backup plans. If something were to go wrong in retirement, maybe you don't have enough income, just write down a few things to get you started on what could be a backup plan instead of having that headlight hit you right there in the tunnel. Is there something that you could do to make a little bit of money here or there? How would you go about getting that started? Just have that backup plan somewhere in place. All right. Well, that's going to wrap it up for this weekend. We do want to thank you for joining us as always. We hope the rest of your weekend is everything you want it to be. This is Brice Payne along with Garrett Ray, the show's The Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB.
Hi, it's Garrett Ray with the Wealth Guardians. Thanks so much for listening to the show. Make sure to check out our weekly series, The Vault, on YouTube. Find our channel, The Wealth Guardians, where we talk about all things retirement planning and cover new topics each week, such as Social Security, tax planning and retirement, and our thoughts on investment best practices, and much more. New episodes air Thursdays at 2 p.m. Make sure to subscribe to the channel so you can get notifications when we release new episodes. We're here to help you retire the job and keep that paycheck. We'll talk soon.